Hello to all Inderes TV listeners and viewers. Lindex reported their Q4 this morning, and we have CEO Susanne Ehnbåge here for interview as usual. Hello, Susanne.
Hi, nice to meet you again.
Hi, you too. So let's start a bit actually on the developments during late last year. So in December, you announced that the strategic assessment on Stockmann division, which has been running for quite a while already, will still continue during the first half of this year. So can you give any insight on the kind of developments on the process and why it's still taking some further time?
I do understand the question. And I think these types of assessments are by nature kind of quite extensive processes and the in-depth review that has taken longer time than originally anticipated. I know that our board is conducting a comprehensive assessment to find the best possible solution for the company and our employees and of course our shareholders. So hopefully we'll come back soon on that topic.
Yes, indeed. And another thing which has been kind of pending for quite a while has been the restructuring process, and you have the one disputed claim left there. And around New Year's, you decided to appeal on the latest decision on the last remaining case. So can you elaborate a bit on your thinking regarding that, since my understanding is that you would have been able to end the restructuring if you would have chosen not to appeal, and now obviously it can take quite a bit time again to go through the appeals process. So what's been your thinking there?
Yes, we appealed on the resolution as we do not agree on the court decision, and it is also against our claim. We of course want to see a resolution that is according to the restructuring program, the current court practice, and also fair to other creditors as well. So that is our view.
Okay, then yeah. Great. Then if we jump to the Q4 earnings, actually, earnings was quite strong, at least compared to our analyst expectations. So can you talk a bit about how the quarter went and how it was against your expectations?
Sure. Yeah, we had a strong finish of the year despite a rather challenging market environment. So in the fourth quarter, the adjusted operating result increased to 36.1 million compared to around 30 million euros previous year. And that was mainly driven by improved gross profit and also a good cost control. And I'm really pleased with the excellent work done in both divisions that materialized in a significant improvement of the Lindex division's adjusted operating result, and also that we had this nice improvement of the Stockmann division's adjusted operating result, and also throughout the year. And looking then at the group's revenue, it was also on par with the comparison period, but still then reflecting on the continued volatility in the fashion market that was throughout the year.
Yeah. Looking at the gross margin on Lindex division particular, it has been now around 65 for 2 years. So should that be seen a kind of normal level going forward as well, or how do you think about the gross margin? Is there some elements impacting that going forward?
We expect to maintain the same gross margin outlook as we have seen now, as you say, in the past couple of years. However, we need to be aware that 80% of our products are purchased in US dollar, and together with expected continued global shipping, it might impact our gross margin in 2025. And at the same time, we have made important investments such as in the omnichannel distribution center, as well as RFID, that should also enable us to improve the gross margin going forward. So these are, I would say, the elements impacting this. And of course, having a strong offering, that is always the most important part.
Yeah, sure. Good. That's helpful. Then looking on your guidance, you are, if you look at the midpoint of the earnings guidance, you are basically expecting slight improvement in both sales and earnings for this year. So what's the basis on that, and how do you see the market developing this year?
I'm thinking, looking here at our, and also stated in our market outlook, I think the macroeconomic situation in our main market remains challenging. And it is super hard to predict, especially now during the first half of the year. And just the latest weeks has shown that the geopolitical uncertainty is really a fact. And of course, this may have a negative impact on the economic recovery. And even though the already lowered interest rates and also decreased inflation will probably have a positive impact, but the growth forecast, especially for the first half of 2025, are still moderate. But I can see in reading that many macroeconomic forecast estimates that towards the latter part of the year that the economic growth might improve. So of course that is what we are hoping for.
Yeah, let's hope so. Some hoped that already last year, but it didn't really happen. So maybe this year. All right. And then today you also announced the kind of plan that you are planning to close the Itiksen department store. I know that's the smallest one of the department stores after you already reduced the size a couple of years ago, and you mentioned that there's no material earnings impact, but can you comment to kind of is direct impact positive or negative, or is it really immaterial?
Yeah, it is as stated. I mean, it will not have any significant impact on the profitability for the Stockmann division, of course, then not also for the Lindex group. It is the smallest department store, and this was a natural decision for us to take it to go in this sort of direction. But still in the planning, but this is now a negotiation phase with the Itiksen department store.
Yeah, and can you say anything about the rest of the department store network? Are there some leases expiring soon, or are you kind of considering otherwise still shrinking down the network?
I think, I mean, the Itiksen department store has no impact on the other department stores as such, but I think it's from a business point of view, we should always review each and every department store from a profitability point of view and also for the customer's point of view. So that is part of the ongoing work that we should always do. But I don't comment any further on each department store.
Yeah, sure, fair enough. Then finally, on the Lindex division side, you have opened the new distribution center and are ramping up it during this year, basically. So do you expect any additional cost from that, which would impact your earnings? At least it doesn't look like that from your guidance, really. And then do you expect already some support from the savings during this year, or is it then starting from 26?
I mean, at this point, looking just at yesterday, 20% of the products are now at a new location. So we are doing this gradually, and this is to be on the safe side. So we don't have any hiccups at the OCDC or the Omnichannel Distribution Center. And we know, and we have stated that before, that we expect the annual savings to be roughly 10 million euros starting at 2026. If you look into those more in detail, it will consist approximately of 6 million euros in direct logistic cost savings, and then 4 million euros related to one stock operation, improved stock availability across the channels, which then would increase the full price sales. When it comes to possible additional cost during the ramp up, of course, we will have a higher direct cost due to 3 locations to operate, transfer stock, and also impacting efficiency until the operations are fully enforced. But I don't want to, at this point, say that that would be an issue, because we have included that in our financial planning, and it's also part of the investment sum.
Yeah, and obviously, if any cost you know are also part of the guidance, I would presume.
Exactly. Yes. Yeah. Exactly.
Great. All right. Thank you, Susanne, for this, and all the best for this year.
Thank you so much for your questions.